We've seen all EV stocks fall, and Rivian was no exception. They actually fell more than 30% when they announced their earnings on February 21st. However, for the moment, price has seemed to stabilize, and one analyst thinks that there is more than 100% upside from current levels. To be exact, he thinks that Rivian stock could rise roughly 135%. Now, before we look at the analysis in the higher time frames, let's look at what this analyst had to say. So, investors in Rivian suffered staggering losses last week after the maker of electric trucks, vans, and SUVs reported mixed earnings. Management told investors that Rivian will only produce 57,000 EVs in 2024, about as many as it produced in 2023, so that shows no growth. Investors who thought they were buying a growth stock were understandably disappointed when Rivian told them it doesn't plan to grow at all, and sold off the stock, down 38% through the end of the week. Now, most investors were disappointed. As it turns out, analysts at Bank of America remains doggedly optimistic about Rivian and its chances, reiterating its buy rating on the stock and setting a $25 price target. Now, pointing to Rivian's better than expected revenue in Q4 and not much worse than feared losses, Bank of America declared Rivian's quarter actually relatively good. Now, Bank of America isn't living in an entirely different reality from the rest of us. The banker did acknowledge that Rivian's production forecast for 2024 was weak, and the banker lowered its price target accordingly from 40 a share before earnings to 25 afterwards. Still, even this lower price target implies that Rivian shares will more than double over the next 12 months. Now, I did have a measured move in which we had this leg down to this leg and kind of duplicating that would put price at zero, but I don't think that's possible. What is possible is if Tesla continues to decline, because they are the barometer for the entire EV market. Rivian is going to decline, and so I have a $5 target, especially if we're actually going into a recession and consumers are going to be cash strapped and consumers won't be buying EV cars, and EV makers continue to slash prices, which is going to hit gross margins and revenue. And for everything I just said, we could see Rivian head lower, which is the reason for this $5 price target. Now, can Rivian rise up to $14, $15? Most certainly, because that was support, resistance, now support. But I think there's more downside risk than there is upside opportunity. And for those reasons, I don't recommend Rivian at this time because I think price can head lower. However, price did bounce off that round hole psychological number of $10. Potentially we're just setting up for the next leg down. Thanks for watching. Subscribe. Please like the video.